Okay, folks, welcome back. This is the ICT Mentorship Midweek Review for May 13th, 2020. And just let me begin by saying this is going to be a real brief review. Okay, so the reason why, in case you're feeling cheated, tomorrow I'm going to be delivering what I promised in regards to the Optimal Trade Entry Pattern Recognition series I'm doing for free on YouTube. Just sticking with free tutorial level ideas. If I get to 5 videos, a set of 5, then I told you I would go into mentorship level with each of those setups. So that video will be a compilation tomorrow. Okay, so I'll try to have it done by 4 o'clock my local time. So just give me that time and it'll be up on the forum. It'll be inside of the May weekly commentary thread. So that's where we'll be for that. And I will continue to do that until we complete the series of 20 videos. So there'll be 4 videos with the level of mentorship content applied to that setup. Okay. All right. So here's the dollar index as our daily chart. And I mentioned last weekend, nothing's really changed. We created this range during this whole pandemic with the COVID-19 business all around the world. And nothing really has changed. We have been treading water just back and forth, working inside of a small, rather small dealing range. About, what is that? 200 points and 250 points or so for the dollar banging around in here doing really nothing. We did not go down to the sell side liquidity here. We did not even run this one, and we have not taken the buy side liquidity out either. So tomorrow is the employment number update for the US. So I'll be interested to see the reaction of the dollar index and what the market does in equities as well after the 8:30 release of that number. So check your economic calendars for tomorrow. Also, you have some business tonight on Australian dollar, so you might want to watch that for an Asian session setup. So anyway, we're looking for pretty much what I've mentioned before in regards to not wanting to be a swing trader. Keep everything with a day trader or scalper's mindset for your practice. And it's pretty much provided the opportunity to see a lot of setups still with this trendless environment that we're in right now. So we're going to drop down into a hourly chart. Okay, so here's the hourly chart. You can see here's Wednesday's price action. We dropped down below yesterday's low, rejected that, and just worked inside of the bearish order block that's here. Admittedly, I don't know if we're going to move higher or lower. That's why I'm waiting to see what the reaction is tomorrow at 8:30 with the unemployment claims data for the US. So I'm kind of like neutral sitting here now, not having any real particular bullish or bearish bias. I don't know. So I have to wait for what the market does tomorrow in the New York session, maybe generate some kind of a narrative that maybe I can play with for you on Twitter. But right now, it's simply just to watch and see what happens. Sometimes it's like that, folks. I warned you when you came in. It's not an every Wednesday, every weekend leads to a perfect scenario to watch everything unfold. Right now, I need more information because it's not really doing too much. 15-minute time frame. Okay, you can see the run on relative equal lows here. Really nice opportunity there to see that. Price rallies, takes relative equal highs out, and moves back into the bearish order block. Okay, you look at the butt end of that candle or a series of 2 candles right in here. It worked right up into its range. So that's really nice. You can see a run on liquidity here. So sell side liquidity purging back inside the range of this high and the lower low it's made. So this would be internal range liquidity aiming for that bearish order block. So external range is below the dealing range low, where it taps into it here, purges that, then runs that up to internal range liquidity, which is the range high and the lower low. And you learn about that in core content. So right now we're still thinking mixed, sideways, trendless. So only look for scalps. Okay, good practice would be using your hourly chart or 4-hour chart, and then using a 15 or 5-minute chart for your scalps, and do price runs for low resistance liquidity runs, or just simply do nothing and exercise patience. All right, so here's the euro, and this is its daily chart, and much like the dollar, it's been working inside of a rather small range as well. Let me zoom in a little bit here, get a little bit more detail. And if we look at what has transpired, we've had this SIBI in here rebalanced to today on Wednesday. If we were looking at just euro, I like the idea of euro possibly running out this low here on the 7th. So we could see this taken out, and if we accelerate below that, targeting here, I'm just not confident yet to say that this low would be a target. Just working with really small ranges and allowing the market to be fickle. Okay, and what do I mean by that? It's trendless. It can start off looking like it's going to really tear off higher or lower, and then it just goes right back to the middle of the range. That is very, very frustrating. And this is the reason why I said we want to focus on day trading, have a day trader's mindset. So anything less than a daily range is optimal in this environment because it's going back and forth sideways on a large scale for a daily range. I mean, it's just not in terms of a lot of pips. It just means for the higher time frame chart daily, it's stuck in a range. And it may not go below this low or this low and continue going lower. It could just go down below there and then go higher again and make an attempt to get it back above here. That's the problem with this environment. If you try to demand too much in terms of directional bias or swing trade idea or position trade idea, it can plague your trading and create frustration, which reels in one of the two poison pills in this industry, which is fear and greed. You're fearful of you're missing out on the next move, which you shouldn't be fearing that. There's always new setups, but you should be resisting greed. Okay, so you're not trying to get in every move. You're not trying to make more money, or if you take a loss, try to get it back right away. Okay, so we're mastering fear because we don't fear missing anything. There's enough setups all the time. You don't have to be in every single one every single day. Okay, that's one of the central tenets to why I'm giving the Optimal Trade Entry Pattern Recognition series online, is because there's still a lot of you in the mentorship that still feel like you have to be trading every single time, and you don't. So what do you do when you're not? What I'm showing on the Optimal Trade Entry Pattern Recognition series, capturing a sample set of study resource. Go in and study those examples, and then wait a week and go back and see how those very setups flesh out to other things that you learn in the core content. And obviously having the additional lessons I'll provide in the price action lessons tomorrow in the 5 setups that I just mentioned. I'll try to keep that video under 1 hour, but I'm not making any promises. All right, so here is the hourly chart on the euro dollar. They had relative equal highs here. We ran up into that. We completed SIBI rebalancing here, and then we had mitigation. So we have mitigation in this area, this consolidation. Anything that was used to go long in here, they mitigated at that price level. So the high on this candle comes in at 1.0896, and the low on the big beefy candle here, the biggest body candle in this consolidation, that's your mitigation block. And you have a low of 1.08960, and again the high over here is 96 and 7 pipettes, so it's just 7 pipettes above into the range here, and it was mitigated. The algorithm allowed the price to spool to the opposite direction, creating a breaker in here. So one of the things you can watch tonight going into London is, do we trade up into the breaker here and then roll for the sell side liquidity either at this low or this low here? Try not to be too demanding with this one. If it does offer the rejection at the bearish breaker, then target this one here for your study. All right, so don't try to get too greedy. And obviously, if we accelerate through that and go below here, then it creates another totally different dynamic for the short-term basis. But we're keeping it short and sweet and intraday only now. All right, and here is the 15-minute time frame. You can see we had a nice run up in here on London. Nice Judas swing, running a previous day's high. Right in here, beautiful run on external range liquidity, targeting internal range liquidity, which is what? The previous low, the previous high. We break outside of external range. What is it going to be paired up with? Well, if it's going to go down, you look inside of the range that was created, the new high and the old low. So that's your range. So where are the lows in between? Well, here you have one right here. So sell side liquidity resides there. The market gravitates to that, clears the sell side liquidity, and then consolidates around it. really, really nice reaction there. The cable market, let's look at that now. All right, so here is the British pound daily chart, and you can see we've again maintained a trading range that's been formed since this whole COVID-19 debacle, and we have yet to run out the sell side liquidity here. We did run below this one, but it hasn't really accelerated. I would have rather seen that happen should it went below here, and it did. But this one here looks as if it might try to make an aggressive run into there. Now, if it goes below here, return back into this BISI. Okay, so this would be your area to study and watch. But I'm trying to keep your focus on the fact of the trading environment that we're in. Okay, it could lead to more than this and not break down or break higher. It could just be rather muddy. Or it could come down and just go below this low by a little bit and never get into this BISI. Okay, so that's the reason why I'm not terribly bearish. That's why I'm not terribly bullish. I'm just neutral at the moment. I want to see what they do with the number tomorrow at 8:30. All right, so here's the hourly chart on the British pound versus the US dollar. Really nice returns, multiple optimal trade entries in here. You got one here, you have one here, you have one here. You can study them on your own. You have a nice breaker in here. So we have the breaker, returns back to that and moves lower. We talked about that as our setup for volume number 4 in the optimal trade entry pattern recognition series on my YouTube channel. Beautiful low resistance liquidity run here. Okay, now notice how this chart on an hourly basis really becomes much more animated and much more useful and insightful versus just simply looking at the daily chart. It's really getting hard to see much from the daily chart except for that old BISI, and nothing really stands out. When you drop down to these lower time frames, remember, if you're in a trading environment that I always refer to when we're in a market environment that's not really clear for swing trades or short-term trading, then my election is we're in a day trader's market. And what does that mean? It means you got to look at a 4-hour chart or a 1-hour chart to frame your idea. Okay, are you bullish or are you bearish? Where should it be drawn to? What's the draw on liquidity? Forget that daily chart. Use these lower time frame charts. But because we've been working with a mode of delivery, just working from daily to hourly to 15-minute, I want to stay within that and not change all these different time frames. Okay, here is the optimal trade entry for the British pound from the 12th rolling into the 13th. Here's our range. It should be right there. There you go. So it's the highest high, the lowest low in here, and price returning back to 70.5 level. Only needing 62% retracement, and your stop would have to be above here. And again, that's a lot for my liking and my taste for a stop, but for a intraday swing trade, okay, not swing trade in the sense that we're trading on a daily chart, long-term position trading, but intraday swing trading, we have a high to low, return back to the optimal trade entry, and then target the old range low here. So from 62, what is that, 23, 30. We'll just call it 23.30. Yeah, we'll just use 23.30, round it. The high comes in at 23.39 and 9 pipettes, so just shy of 40. Price then makes an aggressive run for the sell side liquidity resting below the old days or previous day's low on the 12th. We run that liquidity out here. When we drop down to a 15-minute time frame during the New York session, so the market rallies up and then makes an aggressive run for our sell side liquidity resting here. So I think we could potentially see a run above the short-term equal highs, get up into this old low here, and then if we get the dollar to go higher, this could make an attempt to roll for its lower level sell side liquidity, as I mentioned on the daily chart. That is going to be it. Don't have a whole lot to work with on this one. Just if I had a gun to my head, it would be the dollar goes a little bit higher and allows the euro and cable to drop and take their sell side liquidity. Now, does that mean that the daily for Dixie sees its buy side liquidity pools purged? It doesn't have to, but it can rally a little bit, and then they can exaggerate the British pound or the euro to capture its sell side liquidity, and then that might be the break in the current narrative, where then it creates SMT that is, in my opinion, more meaningful than anything that's been occurring right now. I have a lot of questions about people saying, can you cover SMT? Can you cover this? Can you cover that? I'm covering the things that are most important right now. And just like I mentioned when I first did the YouTube series, I said in the very first video, I said, folks, don't ask me to cover this. Don't ask me to cover that. I'm only covering just this. I'm limiting your focus to the lesson of seeing the pattern repeat over and over and over again. If I tell you that we're in an environment that it's day trading predominantly, try to avoid looking for other things, okay? And if we're in a day trader's market, I'm not looking for significant turns. I'm trusting that, or believing that this could stay longer than I want it to be, which could create frustration if I'm not, submitting to it. So long story short, in layman's terms, slightly bullish dollar. Don't know if that's really valid until we see the employment numbers tomorrow at 8:30 for the U.S. economy. And do we allow the euro and cable to decline? And if it does, we'll be looking for that sell side liquidity pool on the British pound on its daily chart to be a factor for that pair. So I would elect to trade that one. I'm focused primarily on that pair tomorrow, given what I see now. Now this could change, and maybe the euro becomes the one I would be looking at, and that would really be depending largely on what London does, and if dollar does in fact get some lift and go higher for its buy side liquidity pool. I still believe that if anything on the bullishness on the dollar, the weaker of the foreign currencies is going to outperform any upside on the dollar. Okay, so I'll say it one more time so it's clean and easy to understand. Overnight, whichever the two, euro or cable, shows underlying weakness between the two, which is with you would focus on selling short, the weakest one. The weakest shorting scenario, or the one that's going to outperform on the downside between euro or cable, I don't know that at the moment right now, but London will provide that for me. Either way, if euro or cable goes down, it will do so better than the dollar rallies tomorrow, if that makes any sense. In other words, it only needs a little bit of movement on the upside for the dollar to allow a lot of downside to unfold in either euro or cable. And it could be just a real quick, short, flash in the pan type of reaction. But nonetheless, that's the kind of scenario I'm expecting tomorrow. And I just don't have the information or insights to work with to really frame it right here. So I'm depending on what I see tomorrow ahead of the unemployment numbers and what London has done with euro, dollar, and cable, and then whichever one I like better, if there's a setup there, I'll try to point at something tomorrow for you to study. Okay, but again, very, very short-term time frames, very, very nimble type analysis ideas, and try not to be overly weighted in your opinion right now. Okay, because it's going to be easy for you to get frustrated. Try not to have a hard bias on the daily chart. Just dial it back to 4-hour, 1-hour chart and work within those ranges there. Now, it'll probably be a little bit better environment for you to practice and not lose your mind over it all. All right, so tomorrow, again, 5 market setups, and we'll be engrossed in the mentorship level perception of those individually shown videos on YouTube. I'm going to make a compilation for mentorship only. Okay, until I talk to you then, I wish you good luck and good trading.